Are you one of the 42 million people who's got student debt? Odds are the answer might be yes. Especially if you're watching this video, the algorithm gods are working their magic. So no, you are not alone. And if you're spending your time over on Zillow surfing and dreaming of buying a home someday, you might be feeling like those student loans are holding you back. It's a concern we hear all the time here at Zillow, and so we're gonna take a deep dive today into the world of buying a home with student debt just for you. Hi everybody, welcome to Learn with Zillow. I'm Lindsay Cohen, home buying expert on the Zillow team. Our goal with these videos is to simplify and demystify the world of real estate so you can feel more empowered to make confident decisions wherever you are in your journey home. Student loans can feel like a mountain standing between you and home ownership. But the truth is, buying a home with student debt is more possible than you might think. And owning a home while managing student loans is actually pretty common. Let's break down some key points to consider. Can you get a mortgage with student loans? Well, the answer is yes. Many first-time buyers carry anywhere from $30,000 to over $100,000 in student debt and still qualify for a mortgage. Student loans will simply be part of the application that lenders see. Think of your student loans as just one puzzle piece in the bigger picture that lenders consider when determining how much you can borrow for a home loan. Here are 3 big factors lenders will examine as you seek to buy a house with student debt. Number 1, your debt-to-income ratio, or DTI. Debt-to-income ratio plays a huge role in the mortgage process. This percentage compares your monthly debt payments, including student loans, to your gross monthly income, the amount you make before taxes. A DTI ratio of 36% or less is considered ideal to qualify for a conventional loan, but many lenders will work with higher debt ratios, depending on your financial profile and the type of loan you're looking to get. If your DTI is high enough that it's hurting your ability to get the type of loan you want, you might want to consider focusing on paying down your student loans first. But student debt may not hurt your purchase power at all. It just depends on your income, the purchase price of the home, and other debts on your credit report, along with your new monthly house payment. You can use our DTI Calculator to get a personalized estimate of your debt-to-income ratio. Read more about DTI and home loan types at the link below. Number 2, your credit score. A good credit score demonstrates your financial responsibility, so be sure to pay your student loan payments and other debts on time to keep that credit score high. Remember, the higher your credit score, the lower the interest rate you'll ultimately get on a mortgage, and the less you'll have to pay each month. Factor number 3, your savings. Saving for a down payment and closing costs while also keeping up with your student loans can feel like a lot, but it really is possible. Get a budget together and make a point to allocate money for your student loan payments, your daily life essentials, and then be sure to keep a portion for savings. It's okay to start out slow. Your savings will add up if you stay consistent. Now, let's go over the process of how to buy a house with student debt. Here are some steps to get you started. 1. Check your credit score. You'll want to know where you stand with your credit score because it can mean the difference between a good or not so good interest rate. It can even mean the difference between buying a house or not. A credit score of 720 or higher will get you a good interest rate on a conventional loan, but you can also qualify for some loan types with a credit score of 580, or in some cases, even lower. If there was a time you couldn't make your student loan payments, it very well could have hurt your score. But don't worry, you can work on improving it by doing things like paying all your monthly bills on time. Step 2, check your BuyAbility. The BuyAbility tool from Zillow Home Loans will give you a picture of what you can likely afford when it comes to buying a home. Visit the Home Loans tab in your Zillow app or the link in the description box below to find the tool. Once you're there, enter some basic financial details like the range of your credit score and how much you've got saved for down payment. BuyAbility will use those to calculate the home price you can likely afford in your area based on current mortgage rates. And that will tell you just where you stand in affording the home you want. If you want a more detailed picture of your debt-to-income ratio, check out Zillow's DTI Calculator as well. The link is below. Step 3, reduce other debts. It's important to work on improving your debt-to-income ratio because a lower DTI will put more homes within your BuyAbility. A good way to do this is to work on paying off other small debts like credit cards, medical bills, or car payments. Even if you've got student loans, reducing these other debts as much as possible will improve your overall financial picture. Step 4, get pre-qualified. Getting pre-qualified will give you confidence in how much mortgage you could qualify for with your current income and debts. You can get pre-qualified through Zillow Home Loans in as little as 3 minutes with no impact to your credit. See the link below to get started. 5, consider first-time homebuyer or down payment assistance programs. If you're managing student debt while buying your first home, you should consider first-time homebuyer programs and down payment assistance options. Check out our guide to these programs in the description box below. Okay, so now what about high student debt? If you've got more than $100,000 in student loans, you might still be able to buy a house. It really depends on your overall financial picture and your personal home buying goals. Lenders will assess your student loan payments based on your credit report and then factor in your DTI to determine your mortgage eligibility and maximum loan amount. At this point, you might need some more guidance, so reaching out to a financial advisor who can suggest other ways to manage your debt might be a good option. And finally, should you pay off your student loans before buying a house? Well, sorry, there's not exactly a right answer here. It's a personal decision. But buying a home in today's rising market can be a smart move and a solid investment as property values continually increase over time. Okay, so to wrap this up, ask yourself, do you have money saved for down payment? Are you ready for a monthly mortgage payment plus managing your student loan debt? If you answered yes to these questions, it might be time to get pre-qualified, find an agent, and to start getting serious. And here at Zillow, we can help you get started with all of these. Just check the links below. We hope you found this video useful. Be sure to like and subscribe if you want to see more content just like this. Let us know in the comments if you've got other questions. And don't forget to check out the links to our resources and tools in the description box below. Thanks so much for watching.